Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, let's do a quick systems check. If you would, please type OK in the chat box. And if you're hearing me clearly and seeing my screen all right. Okay, great. Looks like we're up and running fine. I've got enough responses. If anyone has any issues as we go along, please feel free to let me know. As always, keep in mind, any one trade is not guaranteed to bring profits. Each and every trade you take does have risk involved in terms of potential losses. Obviously, you want to manage your risk in a way that makes sense with a stop loss or a hedge position. In some way, you should have a risk management plan built into your trading system. And also keep in mind what we cover is not meant to be financial advisement, but it's coming from an educational perspective. Now, we'll go over some unique ways that we can manage risk using our web trader platform, the AvaTrade Go mobile app. There really are some unique features that makes your risk management plan quite easy to carry out. And so we'll go over those features as we go through the technical analysis and the live movements on the charts for potential trade opportunities for you. So just to keep in mind before we get on to the live charts, the basics about what is technical analysis. I know a number of you come to the webinars are pretty new to trading. Basically, technical analysis is looking back at the historical movements on the candlestick charts. Usually it's a candlestick chart that we're looking at, and looking for patterns that look predictable, repetitive, price levels that might look important, that might suggest a particular movement in a certain direction with the price of the instrument that you're trading, etc. And so that's the idea of technical analysis, trying to use historical price data to help predict future movements. It's not always 100% indicative when you find old patterns that those patterns will continue in the future, but certainly many times it's very helpful. And you can make use of indicators to help you out with that as well. They're reading the same charts that you do manually. I think it's important that you understand how to manually read the patterns on the charts, and then using indicators to help you out to confirm what you're thinking makes a lot of sense as well. If you have any questions, you want to give any input as we go along, please do so. First, we'll take a look at the big headlines today in terms of the fundamental news, and then we'll get into the technical analysis and the strategies on the web trader and the AvaTrade Go mobile app, which trade both of those options, trade right on top of the MT4 and MT5 accounts that you've opened with us. So the reason I'm showing you the web trader and AvaTrade Go instead of the MetaTrader platforms is because there are advanced features on the web trader and AvaTrade Go that you just don't have on the MetaTrader platforms that help you with your risk management, technical analysis, fundamental analysis, etc., built right into our platform and app. And you're also obviously free to use other platform options as well. Now, let's go then to, this is the web trader platform, and we'll be on that platform soon. You log into it from here on our main website. And we'll also jump on the app, which you can see in my lower right-hand corner. I'm mirroring my phone, and we will take a look at that as well soon. Now, what are the headlines today? Well, I see Wall Street drops over 1% on Powell's faster taper comments and Omicron worries. Okay, let's talk a little bit about what that headline means. Two main points, and that's really what's moving the markets today. And both of them are causing fear. Okay, the first idea here is Powell, who is an important decision maker, the Federal Reserve Chair in the U.S., important decision maker regarding financial plans and economic strategy within the U.S. So Jerome Powell came out and said, as we've already been thinking, the feds in the U.S. have been planning towards, most recently in the past weeks, that Powell came out and confirmed that, hey, we need to taper the bond buying program sooner rather than later. And the bond buying program is basically a stimulus measure that was put in to help the banks and the economy out in the U.S. So Powell confirmed that, hey, yeah, and basically Janet Yellen spoke as well. And what did they have to say? They're finally admitting that this is not just some temporary inflation. The word they were using the past months was transient inflation, that it was just transient and temporary as the economies were opening back up. And now today's the first time I saw they just flat out said, listen, we have an inflation problem. Okay. And the fact that they came out and said that, and also confirmed that, yeah, we need to cut back on some of this bond buying program, or we need to taper it back to stave off the inflation, right? If they keep giving easy money and assistance to the economy, well, yeah, that helps the economy and stock market go up, which it has, but it also causes prices to rise too fast if you stimulate the economy too quick with too much easy money and low interest rates, etc. And so they're admitting that. They're admitting now that they have that problem. And so that caused a huge fear on the market and a strengthening of the US dollar, at least temporarily today. And then combine that with the Omicron worries, as the headline says, that's the new variant of the COVID virus. And there we are, perfect storm. We see the volatility index up over 20% right now, almost 22%. This is the VIX volatility index right down here that I'm showing you. It's the only thing green on the board because it's showing fear. Volatility is way up. And we see US markets, the futures and the markets when they opened are just red all day, along with other global markets around the world. Easy to predict the way the futures market opened today, that when the US market opened, you'd see a continuation of that drop. And so that's what we were seeing. And so we see negative sentiment. Now, the question is, if there's so much fear, why is the US dollar not strengthening more than it is? And it's because, well, there's fear that there's huge inflation, and that's it. High inflation means the currency is weak, right? And so it's kind of a balancing act here. Yeah, they're going to taper the bond buying program, which cuts back on the stimulus, which should cut back on inflation, which then would strengthen the USD. So the measures that they're about to cut back on should help to re-strengthen the USD, right? To stave off inflation. But I don't see the US dollar really taking a big jump yet. The dollar index we see here is down on the day, okay? Because they haven't actually tapered the bond buying program yet, I would suspect, is why US dollar is not strengthening so much yet. And, it pulled gold down quite a bit. The euro dropped quite a bit against the USD today, but it looks like overall the US dollar is moderately responding to all of this news. It's not really shooting up or down too much. But the fear is definitely there on the markets. And so we keep that in mind now as we go into our technical analysis. That only took us 5 minutes, 10 minutes to look at the headlines and get a feel for what's going on today, to understand why the movements we see on the chart occurred, and to understand maybe what technical analysis strategy and price levels we would prefer on different instruments based on not just the technical analysis, but our understanding of the current environment of fear really that exists right now around the globe. Mohammed, you're asking why the oil market closed earlier. There were a lot of instruments that closed early on Friday because it was the weekend of Thanksgiving, which is a national holiday in the US. And I think Canada as well, maybe not on the same day though. It's kind of a North American holiday, but it's a bank holiday in the US. Thursday, banks were closed, and Friday, I believe they closed at 1 p.m. New York time, which is earlier than usual by a few hours in terms of market time. And so it may have affected not just stocks, but it might have affected some of the commodities with closing times and that sort of thing. Perhaps this is what you're alluding to. Okay, so let's take a look at the app first, AvaTrade Go mobile app, which, by the way, you can download the app here under the Trading Platforms tab. go to AvaTrade Go with your phone, right? With your mobile device, come here, and it directs you to whichever app store is your app store to download our app onto your mobile device. And then what you'll see is what I'm about to show you here. Let me just expand things. So we're on full screen. And so this is the AvaTrade Go mobile app. And let's just kind of go through some features as we look for some strategy ideas. Now, one thing I like to use is the feature that if you tap this tab down here on the lower right, and then scroll down a little bit, you'll see market buzz, Forex featured ideas, analyst views. These featured ideas and analyst views give you free signals. The technical analysis is done for you. David, futures is simply contracts that are available to trade on that are based on what people think the price will be in the future rather than now. So if you're trading on the gold futures for December, end of December, the prices might be a little higher than what the prices are on the spot price of gold. And so you're trading on a contract that's based on what investors think the future price will be. So that's that kind of the idea of futures. And the futures contracts have an expiration. So they either roll over or they expire, depending on which instrument we're talking about. If you're trading on spot, then there's no rollover, there's no expiration in terms of the contract you're trading. Okay, so let's take a look at analyst views. Since we're talking about technical analysis, and I had told you that the app can help you with your technical analysis. So we can look at whether it's cryptocurrencies, if they're available in your region of the world. I know some areas with us, it's not available because we abide by the rules of local regulations. And we hold as many local regulations as possible, and we respect those rules. But if you're in an area where you can trade cryptocurrencies with us, then you have signals here for them. And also for the dollar index and for the standard currency pairs are there as well. And so we say USD Swiss franc says intraday under pressure. USD dropping against the Swiss franc. Well, that makes sense fundamentally. Why would I choose that signal and say, listen, I trust that signal. It makes sense to me why the USD would be under pressure against the Swiss franc. Two reasons from what we just looked at. Okay, fundamentally, why would the USD be somewhat weak? Because the Feds in the US just admitted we've got out of control. I say we because I'm from the US. We've got out of control inflation in the US. They just admitted it for the first time in nationally televised interviews being questioned. And so that would weigh on any currency. If your monetary policymakers came out and admitted, listen, this isn't transitory, this is flat out an inflation problem with the currency. Okay, and so USD being weak makes sense if there's fears that the currency has way too much inflation that's out of control. And then why would the Swiss franc be a good pairing? Why would the Swiss franc strengthen today? What do we call the Japanese yen and the Swiss franc? What type of currencies are they? Safe haven currencies. They tend to be currencies that investors will flock to when there's a lot of fear on the markets. When there's fear about economic problems, it's the Swiss franc and it's the yen that tend to strengthen under those circumstances while the other currencies sell off. Why is that? Because the Swiss economy and the Japanese economy is sheltered somewhat from a lot of the global economic issues. That's the idea. So what we're looking at here is a pairing that makes sense as to why the USD might drop against the Swiss franc in terms of the fundamentals. Then we look and the technical analysis is broken down for us. I mean, here are the price levels written out. Says the preference is short positions as long as the movement is still below 92.15, which is this line right here. You see the blue line? That represents, as long as it's below that line, it's still a good signal. If it went up above that line, then they're saying you should go after these targets in a buy. Okay, that's the alternate scenario. which is listed right down here. Alternate scenario, if the price goes above that blue line, 0.9215, this blue line, then it says buy. And you'd say, well, that's weird. If it goes above this line, meaning if the price goes way higher, they're saying then buy. And if the price is low, they're saying then sell. And the reason for that is it's confirmatory movement. The technical analysis that's being done here, the analysts that set this up understand that if the movement goes up a little bit, it doesn't mean it's a strong uptrend. Could be a small correction before further dropping. But if the movement goes up so much that it breaks through this resistance level, which was an old support, and it broke below and became resistance. So if this movement went up and broke above that resistance, then they would say, wow, that's a strong uptrend. Now you should buy. So waiting for a higher point to buy might seem counterintuitive, but that's exactly what this signal is telling you to do. Only buy if it breaks above this old support level, which should be resistance now if we're in a downtrend. If it breaks above that price, then they're saying your target should be this line on a short move and this line on a longer, more patient move to take profit before the higher resistance up here. Okay, you see the price levels are outlined for you. Very great technical analysis done for you. It saves you time. You don't have to search through all the charts to find the price levels. So if fundamentally it makes sense to sell right now, it also makes sense that if things reversed so much that it broke above this price level, then probably the headlines changed. Probably that fear index went way back down, right? And so you trade with what you know. That's what the preference is. It says our preference to do short positions, meaning selling, as long as the price is still below 92.15 and as long as it hasn't reached these lower levels yet. So as long as it's still above 0.9135, they're saying sell. And your take profit would be either 0.9135 or 0.9110. Okay? And if it went above 0.9215, then you're out. So now we can go back and take a look. Well, what's the live movement look like on the USD Swiss franc? And we'll keep in mind these price levels of 0.9215 and also down here 0.9270 as a low end to take profit on a sell. Okay? Type okay if you're with me on that. How to analyze this information. It also tells you what the RSI is telling you. All right, I don't see any questions popping up, so it looks like we'll be okay to go on this. So now I'm going to go back. I'm going to tap on the home key down here, and I would like to trade maybe on this USD Swiss franc as a simulated trade here. And so now I'm on a demo account. You can be on your live accounts. You can do what you wish. I have to be on a demo account for these webinars. Not allowed regulatory rules wise to be on a live account. And so let's do the search. And let's bring up USD CHF. I typed on my keyboard instead of my phone. There, now I'm typing on my phone. Okay, so now we're looking at the price, 0.9131. So you see it already went that direction. So if you saw this signal when it was still up, tremendous, it already made the move. So we just see that signal was right. It already made the move. And so now we have to take a look and see, is it to the next support level? It doesn't mean you can't still trade on it. So let's go to one-day candles. And had this been an earlier webinar, right? Like I do on Thursdays, it's in the afternoon, then we might have already been in on this move hours ago and we'd be way in the money. So we see the one-day candle, the movement came down and then bounced back up. And we see here is the resistance, the first resistance level on the one-day candles. You see it's support, support, and then once it broke through, it crashed down. So we've got room before we hit a support level down here. I actually see all the way down to this level here on the one-day candles, 0.9100. You see this here? support, support, support. So if I say 0.9125, that's before the support and plenty of distance for a take profit. Okay, so I can go in then and say, okay, I still want to sell. Let me click on sell. It's a market move, so I don't need to put sell only if rate is. That's for a pending order, which we can do later after this one. And I want to program my take profit and stop loss. So here's my take profit. And I said it's right around 0.91 even. Whoops, let me expand that back. Okay, and I click enter. So there's my potential profit. And you see there's the line, so you can confirm, is that above the support level? You see here was the support level right at the bottom of these one-day candles. I'm right above that. Maybe I say, okay, I want to be a little further above that support level. Okay, no problem. So let me come here. And I'll just go back and say 9,115. Okay, now I see the green line moved up a little bit further, just above these wicks at the bottom. And you can adjust that until you get it where you think it looks best for the technical analysis. So we go back, 9,125, which is what I think I suggested originally. And now it's clearly above this support level here on the one-day candles. Support just down here, 2 days where it bounced off this price, and we'd take profit just before that, which still gives us a potential profit of $73 on this small trade. Now, we go to the stop loss. And the stop loss, we could, if our entry price is currently 0.9191, you could just do a set amount up, 0.91 or 92, 15, which would be about 22 pips up, or 0.92. If we go 25 pips, we would be at about 17, 9217, which would be okay as well. So just depends how patient you want to be with your stop loss. So I can put this 0.9218, enter, and I see my potential loss is about a third of my potential profit. Okay, 28 to 73 potential profit. And so now I can go up and let's say I know my risk tolerance is, I don't know, $200 for whatever balance I have. If I had 20,000 balance, $200 would be 1% risk. So maybe that's my risk management plan as I go in. So now it's very easy for me to adjust this and change my lot size. And I can say, let's go with 1.5 lots. And now I see immediately I'm risking 400. And I say, ooh, well, that's too much. I wanted 200. So now I go and I say, instead of 1.5, I do 0.75, enter. And there's my $203 risk, 202. So close enough to my 200, my 1% fictitious risk if I had 20,000 balance. So very simple. I see my potential profits more than double, about 2.5 times what I'm risking. Maybe I'm happy with that. The technical analysis lines up. The fundamental analysis, as we currently see it with fear on the markets, lines up for the Swiss franc to continue to be strong as a safe haven currency. And if you like it, and then there you go, confirm yourself. And now we're on. And we've got the signal agrees with us, the preferred signal. We can see the movement already dipped down this low, and we got lucky with a pullback up that is close to this resistance level, this old support level here. So we're pretty close to that to get our stop loss above that without having to risk too much. And our take profit getting out before the major support level down here, and we still have the advantage here to be able to go after 2.5 times the potential profit compared to the risk with the technical analysis lining up with us. Okay, very opportunistic entry point because of this pullback in a market where we actually have a signal and the expectation that it will continue to come back down. Unless something changes with the headlines, which is why we have our risk management built in. We're risking, 1% if you had 20,000 with this trade size. And by the way, you say, well, you're going after 2.5% profit. That's not very big. Well, it is actually nice. If you can make 1% profit a day on average, if you're going after a 1% profit on, 5 trades and you lose 2 and you win 3, that's a nice day. That means you gained 1%. If you can average that type of return each trading day, approximately 20 trading days each month, you'd be gaining 20% a month. That's a really nice return if you can average that or close to that each month. So you don't have to go after huge risk on each trade. Don't let your emotions necessarily drive your trading. Let your reason and your planning drive your trading strategy. It makes more sense. Okay, so now we can go back and say, okay, let's look at another signal. Why not? Let's see what else is happening. And so I go back to my analyst views or my Forex featured ideas. I look for another signal that makes sense fundamentally right now. Maybe we want to trade on the dollar index to drop. It says that it's under pressure. Remember, the dollar index is paired against other currencies as a basket. So it's Euro USD, GBP USD, USD Swiss franc, etc., all kind of weighted in different amounts to create this dollar index basket of pairings. Since we already did a USD move, let's look at something different. We could look at a cryptocurrency. We could look at the pound, Bitcoin, Euro. Look, USD JPY also predicted to drop in the signal, similar to the USD Swiss franc. Australian USD expected to rebound, etc. Maybe we look at one of these cryptocurrencies. Could look at Ethereum US dollar. For those of you who can trade on cryptocurrencies, why would Ethereum rise with all of this fear? Well, it's paired against the USD for one. If the USD is seen as inflationary and the monetary policy folks are admitting that there's a problem, boy, maybe you'd feel more secure getting into something other than the US dollar. And so there was a time where as gold was reaching new highs, so were the cryptocurrencies, many of them. And there was some comparison on the charts between their movements of gold as a safe haven asset to invest into, and cryptocurrencies kind of being nationless and not tied to any one economy, kind of being free of those things like gold. And many of the cryptocurrencies were moving like a safe haven, like gold was. So there might be some reasoning behind fundamentally why the cryptocurrencies, after pulling down today, could maybe come back up against the US dollar. But even without the fundamental analysis, we can just look at the technical analysis and see right here that the prediction is up. We're above the old resistance levels here. And this looks like there could be upward movement with the signal. So let's get off the app. We'll take a look at the web trader to carry out maybe the analysis on this Ethereum US dollar. So let me just close off this. We'll leave that meeting and let's go to the web trader, which is the other option for trading using our home built platforms. And so if you log in here, you will be on this platform here, which has the same functionality and features as the app, only now you could be on your Macintosh, your Windows-based PC, your iPad, whatever it might be, and you can utilize this web-based trading platform that trades right on top of your MT4 and MT5 accounts, but with extra features that you don't get on those platforms. So here's the position we just took, by the way. I took it on the app, and here it is on the web trader. It's the same account. You'll find it in both places, and you'd also see it on your MT4 or your MT5 account, no matter which platform you use to open it, because it's all the same account in the end. So it's in a small loss. It makes sense. We just opened it. It's got to overcome any spread that was there and get moving. And we happen to enter on a pullback. So maybe the pullback's not quite done yet. We'll see. Okay, so we'll go back to the trading area. We're talking about Ethereum, so let's look at that. And I apologize if there are any of you that can't trade on this in your area. Well, you can still learn from the strategy that we're looking at, which can be applied to any instrument. So why is oil dropping, Mohammed? Good question. It's the same reason all of the markets dropped today. Fear about two things: the Omicron COVID variant that is rapidly causing countries to stop international travel, to stop flights from certain countries, to start thinking about quarantining and shutting things down again. And there's fear that if this spreads rapidly, we could be right back where we were when the first strain came out. And the question is, are the vaccines any good against the new strain? And they just don't know yet if they are or not. And so there's a lot of fear right now about it. And so if economies start to shutter up because of this new variant, I'm not saying they will, but if they do, if major countries and regions start with quarantine measures again and shutting down businesses and restaurants, etc., that creates less demand for energy, which then, if there's less demand for energy, less demand for oil, oil prices in reaction to this type of fear dropped. Now, that drop is a reactionary drop. It's not because there's actually a lower demand for oil yet. There didn't all of a sudden, because of the fear, there's not a huge oversupply of oil because of that. It's not the case. But there's a knee-jerk reaction. So maybe that creates an opportunistic entry point to buy on oil if it dropped so much before anything actually really happened. It's just fear about what might happen. So you have to think about the fact that oil dropped because of speculatory selling in fear of what might happen before it actually happened. So if you're bullish on oil, which everyone has been until right now, until the past couple days or past few days, maybe it creates an entry point that you like. Same for gold. Gold pushed down, and maybe you say, well, gold's an inflationary safe haven, and there's fears about inflation. Boy, if gold dropped, maybe now's the time to get on it, right? So I'm not saying this is what you should do, but this is the way you can think about it. Okay, so that's why it's important to understand the fundamentals too with your technical analysis, so you can make reason out of why did these movements occur? Not just you see that they occurred, but you understand why they occurred. Okay, so let's get off the 1-minute candles on Ethereum and look at maybe 2-hour candles. We say, wow, look at this bullish movement. But if we go to like 1-day candles, then we say there's been dropping lately. Okay, you see here, down, 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 created a support, and then for a few days up. So certainly we just broke above a resistance level right here. Okay, so this was resistance in the past. When it went above, it became support, support, support. When it went below, it became resistance again here. So this price level has been important. And just today, we broke back above this old price level. Okay, so perhaps with the fears about inflation in the US and a weak USD potentially, maybe cryptocurrencies are looking inviting as well. So you could be looking at Ethereum and say, okay, if I buy on Ethereum, I put my stop loss below this resistance level, which acts as support as well. Support, support, support. It breaks below, it becomes resistance. It breaks above, perhaps it becomes support again. So if you're bullish on, let's say, Ethereum, then you come over here and you say, and by the way, what did the signal say that we looked at? When we were looking in the app, the signal told you buy. That's the preferred direction. Now it all makes sense why they're saying that. It broke through a resistance level. It's above the support now. And there's reason for the USD to weaken. It all lines up with why that signal is there. So if you agree with it and you want to trade on it, then here we go. Take profit, stop loss. Let's say you want your take profit at, I don't know, 4,800. We could look at the price levels to see what price level you'd prefer. And stop loss, you want down below this line that I drew, which is 46.31. So let's say 46. Let's even get below that and say 45. Let me expand this chart again and just make sure. 45.17 is the line. So we want to get below that level. So let's get below 45. Let's say 44.90 on the stop loss. And it's nice you can expand the chart while you're in the order window so you can better see the prices. So stop loss, 44.90. And take profit, you could be looking at the high up here as your take profit. If you want a level that makes sense to you, and to see that price, you just slide this up and it tells you that's right around 4,800. So we're talking about take profit of 4,800, so it makes sense technical analysis wise. That gives you about the same risk reward, a little bit higher possible profit than what you're risking. Doesn't always set up 2.5 to 1 potential profit to risk. And this is okay. If you like that setup and you say, okay, I still like to risk 200 per trade or whatever it is, now I adjust my trade size, 0.02. Now I'm risking 300. So do I want to risk a little more than my 1% or a little less than my 1% or whatever percent it is you're risking? You decide. At least you're fully informed here. It's calculating for you. Once you see what you want to see, let's say I decide to go a little heavier. And so now I'm risking about 300 going after 315 profit. And so then there I go. Okay, so I've got my trade in the direction of the signal. I'm fully informed on my risk reward because the platform calculates it for me. And the technical analysis lines up and makes sense along with the fundamentals as well. I'm reading a question right now. Moncoba, or maybe I should call you Vincent. That's exactly what we're talking about, positioning our moves based on the headlines of what's happening today. We looked at the main headlines, the Omicron variant with the COVID variant, the fear about that, and the fear coming out of the US economy, which affects the rest of the global markets as well, about hyperinflation in the US and having to pull back maybe on some of the stimulus measures to stave off inflation. But that's a tough time to start talking about pulling back on stimulus measures when at the same time we've got a new COVID variant scaring the heck out of everybody. So it's a kind of a unique situation, creating a lot of fear. And absolutely, you can try to take advantage of the momentum that exists with that. That's exactly what we're doing. We're trying to line up our technical analysis with the signals that tend to agree with the current environment in terms of the fundamentals as well. That just gives you a little bit more power with your move many times if the fundamentals line up with your technical analysis at the same time. Okay, so that's a couple moves that seem to make sense, and we could look at crude oil as well. Maybe it's in my favorites. I have gold in here. No, I didn't add crude oil to my favorites yet. I can do that now. Crude, there's crude oil. If you want to add something to your favorites, all you have to do is star it. So if let's say I wanted Brent crude, I would go over here, click the star, and now it would be in my favorites list. Okay, and same with crude oil, click the star, and now it's in my favorites list when I go here. Scroll down, it was added most recently, so it's at the bottom of the list. Here they are. Okay, now we're looking at crude oil currently, so let's click on buy on crude oil or sell, depending on what we decide would make sense. And let's expand the chart. Scroll back a bit and we see, wow, crude oil plunged. Now we better get off 4-hour candles. Let's go to 1 week candles maybe. And now we say, wow, look at that. If I draw a line, and let me pull this down. Look at this level here. Okay, these are 1 week candles. This was resistance. And then once it got above, it tried to become support and then did. We see support, tested it again here, support and bounced, and down we come. So as this gets anywhere near this price level, that's a support level that might be tough to break. That's down around 60. And right now the price has dropped quite a bit to this range over here, 65. So it's only $5 away. So let's say I decide to do a market move and buy on this. Let me just go ahead and buy. Or you could do a pending order, right? Closer to the support level if you think this is just a temporary pullback and it'll drop. And maybe that makes more sense. So instead of doing a market buy, we say execute when price hits. This is how simple it is to do a pending order on this platform. You don't have to say that it's a buy limit pending order or a buy stop pending order. You don't have to know the type. It's simplified here. You just tell it at what price do you want to buy, and it makes it the right type of pending order. So you don't have to be so technical in terms of your knowledge base about types of pending orders. So let's say that if it gets down just above this support level on the 1 week candles, let's say it gets to, we could say 65 down here, which it's at now, or we can say lower, right? So we could come down here and say if it gets to 62, then I would rather buy, right? Current price is this line right here. It tried to pull back, it dropped, and it's right here. If we go to 1 day candles, maybe we'll see it better because there seems to be a gap on the candles there in the 1 week. And there we are. Here's our support level down here. You see it better on the 1 day candles as I scroll back. Support, support. It hit again and bounced. So 1, 2, 3 times it held at this price level on the 1 day candles. And so we're at 65 now. Looks like it might try to test that level. So you might say, if it hits 62, I want to buy. Since we did market moves on the others, we'll just do a pending order here. So, whoops. Execute when price hits 62. Your stop loss would then be below the support level, right? And maybe you want to get below this wick here, which would be down around, let's say, 57. So you're risking $5 per barrel to your stop loss. So stop loss, 57. Okay? And it's just beyond viewing on this chart because it's below this wick here. And if I pull this down, we can get a view of the price. You see down here's 58, 57.9. Right there at the bottom of this wick, we're at 57.6. So if we go to 57, we're below all of these support levels. And then our take profit, we can take a look and say, we could be patient and say, if it comes back up to this old resistance level, resistance, then once it got above, that became support, and then it crashed below. So this would be the first major resistance level up around 77 without even having to go to the recent highs above 80. So maybe we say 75 then could be a spot that would make sense to take profit before this resistance. So then we say take profit 75. So, whoops. So now we can see potential profit 650, potential loss 250. Well, there's around my 200 risk that I was wanting. Could go down a little. Lot size of 0.04, so 40 barrels. Risking exactly 200, potential profit 520. Okay, great. If I like it, you'll see that that's not an open trade. You see over here, the 2 trades we opened are under the positions folder. Those are running already. And then the one we just prepared as a buy is a pending order. It's listed under orders because it didn't open yet. So if oil drops closer to that support, then you're buying. Okay? And so This is an example of how to use the current fundamental news. There's fear driving oil down. So maybe you wait and you're more patient for a better entry point for oil to come down, riding the current fear, but all the while understanding that the bigger picture is there have been oil shortages and gas prices have been through the roof lately. So wait for the pullback to where you like the price. If you don't like the current price, you don't take it. I think a market move could make sense still, because you still could have a shorter stop loss compared to potential profit. But you can optimize the current fear that's dropping oil by maybe being more patient and buying from a lower point above a major support level if you believe the bigger picture means oil will go up, as it had been until recently. Okay, any questions? Any more questions? Input before we end things. We've been going for a good 45 minutes or more. I think it's a good spot to call it quits for the evening in terms of the webinar, to leave you all time to go maybe do some trading, because if we look at gold, it might look similar to crude oil here. It pulled down and maybe it's a price that you like with a support level where it could come rushing back up. I see a question, how low will oil go? Well, nobody knows for sure, right? But we found a nice support level on the 1 week candles that's down around 60. So you get your stop loss below that. You either take a market buy or you wait for it to get closer if you think it'll drop more. And that might be a spot where you could take a shot at buying, where you could be wrong, certainly. Could go lower, but you don't have to risk so much because it already dropped a lot. All right, everybody, thank you for joining. Good luck with your trading. I think there'll be a lot of predictable moves this evening, a lot of large moves. So good luck with that. I think there's a lot of potential opportunity there to go after. All right, everybody, bye for now. Good luck with your trading.